Our guest today is Peter McGuire from XM. He's going to talk to us about what's going on in markets at the moment and also a few currency trades as well. Peter, great to see you there today. What did you make of what happened last night, some of the volatility? I'm just trying to get everyone's impression of things at the moment. What's yours?
Well, good afternoon, Kyle. I haven't been up long because I was up late into the night watching it all, and it was certainly volatile. So that's what 24-hour markets are all about. Yeah, it took everyone by surprise, the viciousness of it, and that's been demonstrated across Asia today with the Aussie where it is. We're the ugliest of a bad bunch. And New York was just spanked down. Dollar rose. We're running at that 109.81 for the US dollar index. So you've got to be conscious of that. Very strong bid up. Equity markets spanked down. NASDAQ over 5%. So yeah, it was a very ugly night if you were long, and it just demonstrates the current inflation story and what's going on there, not only in the US, but certainly globally, and it's starting to ratchet up and gallop away. So yeah, it's not a great time for the consumer out there.
No, it certainly wouldn't seem so. There's cost of living pressures in the United States ratcheting high, like you said, and also you wonder how that'll affect what's going on in Australia too. So just as a very general sense, do you think risk remains skewed to the downside given the macroeconomic backdrop, that you fade rallies and risk and perhaps seek out safety where you can?
You can answer it I think you can answer that with one word: yes. and because I'm worried about the situation as far as, and the Economist story on Tuesday, or yesterday that is, as far as the Ponzi scheme, and they were their words, not mine, Chinese property market, then that's a great growing tail. You've got the lockdowns, and you've got the situation worsting seems to be by China's storyline, and then we're looking at that inflation story, high energy costs, and leading into the Euro winter period. Overall, Kyle, it's not a good time, and recessionary fears are certainly here. I think we're absolutely in recession, and how deep they go, and how does the Fed and central bankers manage through that process. So the only currency at the moment that's worth trading, everything long US dollar, and the others just seem to get hit, and that's demonstrated by the yen nearly at 145. Who could have imagined it?
Yeah, absolutely. And we'll be wondering when we start to get a little bit of jawboning or perhaps even material action from the BOJ, if at all. But let's get on to some of those currency trades. We've got a few up our sleeve today. I thought we might kick things off with, the big one, the Euro USD, a big drop overnight. What are you seeing there in terms of the charts?
Well, you're sitting at around about 99.86. So let's just say we're at parity. It's close enough to it. How much further do we see downside pressure? We've had last week's commentary as far as, an interest rate rise from Chairman Lagarde, or President Lagarde, and what's going to be on the storyline is now, from the Fed standpoint. So it seems to be dragging down. If we do see a 75, and if not even up 1 point or 100 basis point increase by Fed Chair Powell, then I think that really puts a lot more momentum to stoke the fire of the US dollar and put further pressure on that euro. Now, how much further can it go? We're really, approaching uncharted territory. So does it go under that 99, 98, 97 sort of handle? I think it's got the momentum to get there, but it's going to be a lot of those big moves have already been appreciated, Kyle, and it's just time to whipsaw and hold on to your hat a little bit.
Yeah, definitely. The big move last night, though, was in the Aussie USD. I think it was down by 2.3% for the day, if I'm not mistaken. There's a couple of key levels coming up for the Aussie USD. Again, another one that you'd be sort of fading in favour of, obviously, or on the basis of a stronger dollar.
Well, you were running at that 69 handle over the last 24 to 36 hours, and now you're at 67.32. So you're right, a couple of percent down. And the overall softness, and that's why I made point of that earlier as far as the China situation, if that really starts to capitulate, and you'll only got to see the price of ore and what's happening, from a commodity standpoint, then there's, that downward pressure is going to, I think, start to run away on the Aussie, and you could be sub 67 it's knocking on that door very, very closely. It's been really wild over the last couple of months as far as volatility, and I don't necessarily think that that's going to stop. So, it's hard to say, well, what's happening? It's such a short-term proposition as far as trading on currencies. You can take, minute views, you can take, like some of them take second views, and or an hour seems to be, a hell of a long time. It's like a 50-year marriage. So you've got to be conscious, really wild trading conditions. And again, that is wonderful opportunity for traders because, if you get your stops right, look at the charts, watch it closely. Many people around the world favour the Aussie as a real, wild bronco to trade, Kyle.
Yeah, definitely. In this highly volatile environment where sentiment is so shaky, and I guess you don't even have the China story really to assist things at all at this point in time. But let's get over to the sterling. I saw this morning it was around 115 when I woke up. Again, down around 1.7%, I do believe. Don't quote me on that. For the session, the UK has got its own woes at the moment, and that's not just, of course, the death of the beloved monarch, but also in terms of its economy. How are you seeing the chart stack up on the pound? Because it's clearly skewed to the downside there too.
Well, exactly. We're 115.06 or 1.1506 at the moment, so you're spot on. And I think that momentum seems to be, softness, a 114, maybe even a 113 handle sometime over the next week or two, depending upon what happens. We're conscious. We've got some big numbers coming out of the UK this week or during this week, retail sales and a few others. So I think that the overall softness, you've got runaway inflation, and that pound is really, being pushed hard. Many analysts are saying 112 is the new number. We had 145 as a handle for the yen. It's hit that, and 112 seems to be the go-to button for the pound. I'm not suggesting we're going to get there real soon, but I think it's certainly got a 114 sometime during this week, and we'll just have to see what the US dollar is prepared to do, because it seems to be onward and upward, and approaching that 110 US dollar index, Kyle, certainly adds more firepower to the King dollar.
Yeah, definitely, and might be worth noting too that the Bank of England have pushed back its meeting just for a few days to honour the Queen there. The 22nd was supposed to meet, I do believe. But just to wrap things up. Volatile market, obviously we looked at some sort of currency pairs today in particular, but just in terms of financial markets more broadly when you're trading, how do you think you sort of approach this environment? Volatility, obviously fantastic for trading opportunities, but comes with a little bit of risk. How's that managed?
You've got to be prudent. I think that traders shouldn't be... I think one of the biggest problems with retail traders is the blue sky, and I've been, the blue sky mantra, in the sense that you're always looking for more blue sky. You'll never go broke taking a profit. There's the first point. The second point is don't get greedy, because it's a 24-hour-a-day market, and you've got to be conscious that it doesn't sleep, and there's always opportunity. If you feel as though you've missed out on a particular position, well, just hang around a little while, because I'm sure something else will present itself. There's a vast array of cross rates that you can look at. So I think prudent, be physically fit, be conscious of doing your homework and your fundamental analysis, and certainly your technicals. Look at what happens as far as the seasonality of different times of the year impacts. So, hurricane seasons, Christmas times, all religious festivals. Just be conscious of what, announcements, Fed, so on. You've got to do your homework, Kyle, and it's something that I think you've got to embrace and enjoy. And the more homework you do, the more that you realise that it's a big, vast market, and don't try and second guess it. You've got to be conscious, and you've got to be a little brave, but also prudent.